Welcome back. Let's head to the movies now. It was a mixed quarter for PVR. Their revenue and EBITDA came above street expectations. The profits were actually affected by a couple of one-off items, while the occupancies have also declined. But there's a long list of new releases lined up, so perhaps the future looks bright. Let's find out. Ajay Bijli, the Managing Director, and Nitin Sood, the CFO at PVR INOX, join us now to talk more about their Q4 performance and the way forward. Gentlemen, morning to both of you. Always great speaking to you about the future of the business as well as what's happened in the quarter gone by. Ajay, let me start with you. Before we talk about the brass tacks numbers, it seems like people are back to the theatres. If you just exclude all the one-offs, then the numbers are not too bad, but occupancy has dipped a bit. What are the demand trends looking like now? Because things are changing, by the hour these days. Forget about by the year. What do you see as the way forward in terms of the big demand trends in the industry?
Good morning, and I'm so happy you've started on a positive note because, it's been only about 12 to 14 months since we've opened after the pandemic. But I'm just very, I'm like a born optimist, and I'm very optimistic about this business as well. And it's been quite amazing. If the movies do well, they hit a peak which has never been seen before. So if you look at RRR, KGF, Avatar 2, Pathan. But if a movie doesn't connect, then the dips are very low as well. So that's one change which has happened. But I think it's temporary because I think everybody's getting their act together now. The content side, the news is very good. We've been talking to filmmakers. They're also now re-looking at their scripts, and they're trying to make films which will connect the audiences straight. They were always doing that previous to the pandemic as well. But now the focus on scripts and movies is much more than before, and what will connect with the consumers. So the lineup, as you said earlier in your opening comments, is looking fantastic. June has got two big movies coming. Maidan is coming, Adi Purush is coming, Flash is coming. Just now Guardians of the Galaxy has done exceedingly well. Kerala Story has been a sleeper hit. Then of course the big one, Fast and the Furious Part 10 is coming, which is like a Hindi movie, which is coming on basically on this Friday basically. July is massive. It's got Oppenheimer, it's got Mission Impossible. Then, of course, the big, Shah Rukh movie is coming in September. So I think the lineup is looking good, and people are, coming out and watching movies. So I think I'm quite happy with.
Ajay, if people are coming out and watching movies and the lineup is looking good, what explains the weakness in occupancy? I mean, not just in the quarter gone by where occupancy has fallen to 22%, but in general, it's much lower than even pre-pandemic. What explains this, and what is the expectation as we move along?
The explanation, one of them is what I already gave you, because the volatility is something which is very extreme. So if the movie does well, it does exceedingly well. And if the movie doesn't do well, then it completely tanks. So I think that volatility is something that has probably lasted longer than I thought. So it's lasted about 12 to 14 months now. But now going forward, ours is a momentum business. We show 6 to 7 trailers. When people come and watch movies, their appetite gets whetted to watch another movie. So that momentum happens only if every week something gets released. So now we are seeing that happening. Every week there's a movie. And if people love the experience, so for example, if you go to see Guardians of the Galaxy just now, people see a trailer of Flash, they see a trailer of Fast and the Furious, they see a trailer of Mission Impossible. Suddenly their appetite gets whetted, and you can hear them making plans to watch another movie. So I think that's what is going to change now, that the momentum will come back because the gaps are not going to be between releases. So past 1 year, if you look at the overall picture, we still got 141 million people. So we can say that we are lower than pre-pandemic, no doubt about it. But 141 million people coming to the cinemas is still a large number. And it's only going to get better as the momentum picks up.
Gentlemen, good morning. And I was just discussing that I saw Guardians of the Galaxy and I loved it. And Oppenheimer is, I think, a Christopher Nolan movie, so look forward to that as well.
Oppenheimer.
Absolutely. Mr. Bijli, I want to just ask you, give us some way to think about what FY24 numbers will look like. Both in terms of revenues. I know it's difficult to call this out, but internally, what's the thought process after what you've done in FY23? and on margins as well for 23, which were about 10.2%, right? EBITDA margins. What will they look like in FY24? What's the internal targets?
Well, the good news is that the combined, this quarter and this year, the numbers are, not comparable, because some of the numbers, like for example, last quarter is PVR and INOX put together what they were earlier. But if you look at the whole year, it's PVR's 12 months, but INOX is only 3 months. So this year it's a bit lopsided the way the numbers are reported. But if you look at if you add PVR and INOX when they were separate, we did a turnover of about 5,300 crores in 2022 ended 2022 fiscal year, and 2023 fiscal year is 5,300. So the difference is very marginal. So the good news is that revenue-wise we are still comparable, and we are adding about 180 odd screens this year, and so we are looking at least, Nitin, what would be what's the estimate of our? I'm blanking out here, of the next year. Of our turnover should be at least 20% more than where we are currently. You are on mute.
Nitin, we would like to hear you.
Yeah. So we should be anything between 6,000 to 7,000 crore revenue, depending upon how the box office performs. And we did about 150 million admissions. And the hope is Q2, Q3, Q4 are going to be significantly better quarters. We should get back to pre-pandemic admission levels of about 165, 170 million admissions, 170 million admissions for the full year.
And margins also, if you can just give us that number.
Yeah, I think margins, the focus this year, a lot of it is, operating leverage in the business, depending upon how box office performs. But, our focus is to get down to 18 to 20% operating margins during this year. That's going to be the focus of the business.
Okay, all right. Let's focus on a couple of quick points then. The ad revenues. Now, that's still much lower than what we saw pre-pandemic. I think you're doing 550 crores, or now it's sub 400 crores. So when do we get to ad revenues which are at pre-pandemic levels? And also give us some clarity. I believe you're shutting 50 screens, but you all had a target of opening some as well. So net, what is the addition that we're looking at in the coming year?
You see, the ones that we've... can I answer the second question first?
Yeah, please go ahead.
PVR has been around for 25 years. INOX has been around for 20 years. So there's a lot of properties which have come towards the end of their lease. And also some of the malls have become dilapidated. And those are not as attractive as when they were earlier. So there's no point continuing with those screens. So there's 17 odd properties, which totaled about 50 screens, are the ones which leases were coming to an end, and they did not have any life left in them. So I think that always happens after some time when the business reaches its maturity in any retail business. So you need to have units which are all profitable. I think the focus is that every unit level economics has to come back to what it was pre-pandemic level. And we don't want to have growth for the heck of it. Growth has to be profitable growth. And if we have 1,700 screens going up to 1,900 screens next year, each screen must stand on its own 2 feet and make money, and get that IRR threshold that we look for when we sign. So I think net will always have some screens will be shutting down, but overall there'll be a growth of about 150 to 175 screens every year.
All right, and ad revenues?
Ad revenues, pre-pandemic, of course, the combined entity did about 550 odd crores, and this time we've done about 380 crores. But I think there's a lot of upside which will be there in the INOX properties, because their ad revenue traditionally was always lower. And again, the future number, Nitin, what is the number forecast of, sorry, help me out here with the ad revenues that we're looking at?
I think, again, the immediate focus is to try to get back to pre-pandemic level, because advertising revenues have definitely taken a big hit. So this year, our focus will be how soon can we get back to pre-pandemic level, cross a 500 crore kind of an advertising number. Things are definitely looking much better. And, you will see a lot of traction coming in that starting Q2 and in Q2 onwards.
Okay, Ajay, just one final question, because I remember in an earlier interview you had mentioned that you're looking to broaden your presence in southern India, and you're looking to increase the premium formats in the southern part of the market as well. Once that comes through, how much could you see in terms of incremental revenues in FY25? I mean, you spoke about FY24 as about 6,000 to 7,000 crores. Once you sort of increase the premium formats in southern India, what kind of growth are you penciling in?
Well, first of all, if you look at our current screen portfolio, 31% of our screens, of the 1689 screens that we operate, so 523 screens are in the south. And the reason our focus is in south is not just because south has about 6 to 7 languages which the consumers go and watch, Hindi, English, Tamil, Malayalam, Telugu, and Kannada, but also because the multiplex penetration is very low in the south. So only now a lot of malls are coming up in Kochi, Chennai, Bangalore, and smaller cities as well. So that's one reason why we are there. So the incremental revenue, is in the numbers that Nitin has given you, in the 6,000, 7,000 crores that we are anticipating next year. So, we haven't really focused on exactly how South will contribute, but South has always been a fabulous contributor to us. And premium formats, again, we have to be careful because India is a disparate market. Not everywhere we can have premium formats. So wherever there's a consumer who wants a completely differentiated experience from his home experience to his out-of-home experience, there we're adding premium formats, whether it's recliners, whether it's IMAX, whether it's 4DX, ICE, and there's an upcharge on the ticket prices. Premium formats also go hand in hand with where demographics watch Hollywood movies more,
sure,
or blockbuster films or tentpole movies like Pathan, Jawan, and various Adi Purush and Maidan. So many big movies. War 2 is coming. Again, it's not everywhere because we also have to be very careful about our ATP and in certain markets. So there's India, there is Bharat, and we are addressing both.
Sure,
and
sure.
Urban markets have a different strategy and smaller markets have a different strategy.
Of course, I completely understand that. All the best. I'm sure it's a very exciting time with the slew of new launches lined up. Nitin and Ajay, always a pleasure speaking with you. Thanks a lot for speaking to CNBC-TV18. Let's slip into a quick break now, take a break from all this entertainment and get down to talking brass tacks about the market and the economy. Lata Venkatesh will get chatting with Sunil Mathur, who is the MD and CEO of Siemens, to discuss their Q2 earnings performance and demand trends in just a bit. Stay tuned.